This is Brian Stoll for Timing Strategies, Monday, October the 8th, 2007. Pick up where we left off on Friday's comment. What we have set up here is a potential for a very strong reversal. Again, pictures in the clouds as far as I care. Old-fashioned technical analysis by the Fibber and McGee method, whatever that book uses. We could see a gap island top here that could take us back down into the close of Thursday's high. We currently have a short position on for the clients we manage using a Ridex end-of-day system mutual funds with a basket using the Russell 2000, the Dow, the S&P, and the NASDAQ. Longer term, we're looking for this gap to get closed and come somewhere down in this area to test the 21-day average or somewhere down to this range below or just above where the Fed meeting was made on September the 18th. What I want to comment on is that we've had a longer-term quarterly comment post just below this S&P outlook for the fourth quarter of 2007. What we have here is the threat of the same type of flim-flam that's been going on all the way up since August of 2006. Dow, S&P make a new high somewhere back in July compared to where we were in June. We gap up higher. We stay above that gap high of new all-time highs for several days, a couple of inside days. Everybody waiting for that gap to get closed, never gets closed, the shorts get squeezed. Finally, when the shorts are squeezed enough, bada bing, bada boom, and we get washed. Let's take a look at when that might have happened again previously and not played out the same way. March, February of 2007 this year, we got a new all-time high. We get a washout when China decides they want to raise interest rates on margin, and we get one-day flush. Market again gets put back up with the fire department and their liquidity machine. Again, we get a gap up higher. We get a 3 or 4 day consolidation just at those highs, and then the market actually gives everybody the finger and says, "Smell my butt," as it just keeps getting marched higher, and the shorts just keep getting squeezed. That is the scenario that we absolutely have to be watch out for, and stops are always mandatory before any position gets put on, period. Let's go look back again real quick to about the same time, fourth quarter last year, using the spiders. Again, we got the May high of 2006, 3-4 day consolidation after the Fed meeting on May 8th. Then the market just goes into a sell-off, flushes out all the weak hands. Then right about before that period of time, we get a new Secretary of Treasury, and then liquidity machine gets turned on. We get marched right back up to the old highs, and right around the same time of this year, October of 06 last year, a consolidation with a what appears to be very similar without the gap higher, and then the market just keeps getting marched up higher from there. As it moves higher, it's giving everybody the finger, saying, "Smell my butt, I'm going higher, ha ha." Well, is that going to happen this year? Is that going to happen now? I have no idea. But again, like I did mention, we do have currently a short position on for our clients using the Ridex platform, end of day with a 50% position in the basket of all four indices. For some of our more aggressive clients, we also do have positions on in the QID, which is a negatively correlated 2-beta ETF, which has got real good liquidity. Also with that basket, we're using the TWM, which is again a 2-beta negatively correlated ETF for the Russell 2000, and also the SDS, which is for the S&P, a negative 2-beta, and also what we also have is the DXD for the Dow. We have a position on in that. Again, this is a basket, 4-way split. We've got about a third of a position on in here that we would normally take because of the 2-beta leverage in there, and also because we are at all times very cautious of a potential gap higher and a gap run like we saw this same time last year. So again, please refer to the analog fourth quarter outlook. This is a daily commentary to try to fine-tune it on a daily basis. If you have any questions or comments, please send us an email. Again, this is Brian Stoll for Timing Strategies, Monday, October the 8th, 2007. Thank you very much.